Then global market activity is set to end this week's trade in positive territory. The improved sentiment has resulted in the JSE extending gains along with its global peers. The rand is also clawing back the recent losses, while oil makes further gains and gold nears a one-week low. Let's speak now to Sanlam's Greg Katznellenbogen, who joins us for a quick markets update. Greg, good morning to you and thank you for your time. Let's begin with that quick overview of how things are shaping up at the JSE in early trade.
Well, good morning. In early trade, the all-share index is down about 2/3 of 1%. That's in line with the Asian markets that are down. Asian markets initially got a bit of a boost when China has announced additional stimulus for their market, that they intend to put more money into the market, and so that has led to initial good start for the market. And then, of course, with Intel's results in the US last night, that was not good. That knocked the tech stocks in Asia this morning. So we are following suit on the down, at least for the until London opens at about 10 o'clock our time.
Let's focus the attention a little more on the rand. It continues to trade in positive territory. Are we expecting the local currency to continue making these gains?
Well, I think what we can expect to continue is the volatility in the rand. It's a little bit weaker again this morning. That's because, the dollar has been a period of gain and then some losses. But at the moment, South Africa also is in the news. The finance minister did indicate it's going to be quite a tough budget in February, although I'm not sure how tough it can be just prior to an election. But anyhow, he's warning the market that we're in a tough position. I think that it's also kept the rand, a little bit on the back foot, but it got some benefit yesterday when the Reserve Bank left interest rates untouched, because obviously money flows to higher interest rates. So if we had cut interest rates, we would have probably seen a slightly weaker currency. But we just expect volatility to continue, and the rand should trade in this 1840 to 19 rand level, I think, for the foreseeable future.
Yeah. Let's perhaps talk about the commodities. Oil jumping over 2%, while gold, as we mentioned earlier, nears this one-week low. Tell us about these developments on the commodities front.
So really, oil is obviously, the price of oil has gone up. The fact that China is going to stimulate its economy is beneficial to oil, because it's a very big oil importer, so anything that's good for the Chinese economy, good for the oil price. Also, that you still have these geopolitical tensions in the Red Sea, so that hasn't gone away. And then there was, the US stockpiles were drawn down as well, so that has given some underpin to the oil price. So I expect that it to remain relatively strong. Gold has been, although gold remains above $2,000 an ounce, it has been a little bit weak in the past few days, and that's because one is not sure just when the US Federal Reserve will start cutting interest rates and how far they will go. But as interest rates come down, that will be good for gold, as the real yield also comes down. But obviously, if the US, this afternoon at 3:30, we should get some inflation data from the US market, and if that indicates that inflation is still within line in the Fed's target, that means that interest rates will probably come sooner rather than later, and that will be good for gold.
Let's talk about the Richards Bay coal exports dropping 6.2% year on year. Was that expected, given the challenges at our ports authorities?
Well, expected in a way, but also the shocking thing about this is that this is a 30-year low. This is 30 years ago. These are sort of the volumes that we were pushing through Richards Bay, but it's expected because of Transnet problems. You would have seen recently that there was a big rail crash between two trains near Richards Bay. There's also a shortage of locomotives, so it probably was expected, but it just brings home the fact that our coal, we have demand for coal, but we can't actually get our commodities in sufficient quantities through our ports.
Let's conclude with eBay. It's set to cut 1,000 jobs. Let's talk about this move that the company is doing, because the aim, it is said, it is to reduce the contractors in order to sharpen its focus. What exactly do they mean?
Well, the bottom line they mean is that their expenses are running ahead of the growth in their revenue, and they need to cut expenses and to try and improve their revenues and their bottom line. But this follows a long list of tech companies that are laying off staff. You saw Microsoft is laying off 1,900 people from their Activision, their video game division. And you've seen over the last year companies like Alphabet and Meta have also laid off thousands of people. So it's really, these tech companies have been hiring and without regard to costs, and now suddenly the focus is on controlling their costs, and this is what is happening across the industry. This will cost them about $100 million, but it should help their bottom line.
Greg Katznellenbogen, thank you very much for that markets update. He is with Sanlam. All right.